What's happening, good people? We are here to record Macro Dirt Podcast number 47. My man Jared Ferret Face Dillian is back from Oxford, Mississippi. What is up, Dragon Breath?
What is up, fart knocker?
How are you, my man?
Good.
Tell me about Oxford.
Well, I got the T-shirt. So this is Square Books, which actually you would never know it, but is one of the best bookstores in the country, right in downtown Oxford.
Why do you say that?
Oh my God! First of all, Oxford is a literary town. So William Faulkner, Barry Hannah, Donna Tartt. There's been all these graduates from Old Miss. That Old Miss is a really good literary school. Like a lot of people don't realize this.
Did not
Got
know
some of the
that.
greatest writers in the country come out of there. So that's the main reason I went there. You know, it has this strong literary tradition, and I just rented an Airbnb for 9 days, and I went to the coffee shop downtown, and I just sat in the coffee shop and just freaking wrote as fast as I could. I wrote 30,000 words in a week. I was cranking. So I finished the Awesome Portfolio book, and I got about 15,000 words into my new novel, which I'm calling Inflation Fighter, but that might not be the title. That's just like a working title. So,
All right, cool. Congrats, man. Well
yeah.
done. Way to go getting that trip under your belt and getting all that work done. You must feel a great sense of accomplishment. Um, while you were gone, the Macro Dirt podcast lit up the internet. I did that interview with Raul, and we got over 30,000, almost 30,000 views on YouTube alone.
Holy crap.
Yeah, like 250,000 in total. Speaking of holy crap, let's ring the bell, hit the hype machine. So thank you to all of our existing and new subscribers. That is really empowering to JD and I, and that is what keeps us going and keeping our streak alive, creating financial content. So let's do that and get right into the markets, JD. Where do you want to start from 30,000 feet up off the plane from Mississippi?
Well, the US is kind of having this slow detonating credit crisis, right?
Mm.
So one of the things I said in my newsletter on Monday, bonds are selling off, but it's not because of duration, it's because of credit. It's because, and look, when was the last time you looked at a chart of credit default swaps on the United States? They're going parabolic. Parabolic. So people are looking at this big, beautiful bill, and there's tax cuts and there's more spending. And they're like, look, nobody has an appetite to fix this problem. We had Doge, which cut 160 billion, didn't do shit, and we're actually worse off than where we were before. So the capital markets are going on strike in terms of buying bonds. Now, do you short bonds here? I think it's a little bit late. I think you should have shorted them 2 weeks ago. I think we're actually probably going to get a bounce pretty soon. The dollar is melting. I'm actually long the dollar. It's causing me some pain. I think we should get a bounce. It is very crowded, but dude, if you pay attention to Japan, JGB yields are up over 3% now. Dude, it's checkmate. They're insolvent. This is the trade that Kyle Bass was trying to put on in 2008 when he was buying CDS on Japan, and it just didn't work for 15 years.
Yeah.
Now it's finally starting to work. So globally, the US, Japan, it's going to start happening in other countries. It's a problem.
Okay, so if we got a problem, it sounds like a problem that we're going to need and address by central bankers, if not a coordinated problem to address, right? At some point, would you say that we're going to get to that level of stress where we need to expect some kind of an intervention, either in the
Dude,
currency or bond market?
if we get to 5.5%, 6% on tens, there's going to be open discussion of yield curve control. And this is why, the credit to you, you called the top in gold. We got the correction. You said I had a date with the moving averages. Hasn't quite got down to the moving averages. But I don't think you want to screw around with gold here. I mean, gold is like the release valve for all this stuff. You got to be. Go ahead.
No, I didn't mean to cut you off, JD, but I have something relevant because I had lunch yesterday with my former boss at Goldman Sachs, who I consider to be the best gold trader in the world. And I asked him, if he was playing the market, and he said that he had been involved The one thing that struck me was, I said, what do you do? If the central bank buying stops, can you come after this on the short side, or is there a trade there? And he looked at it and he's like, there's 400,000 lots of open interest. What does that mean? That means that if they want to come after it, there's plenty of money that can come into the gold market and the futures can get limit long again, right? And that seems like something that you might expect if we have this blow up situation in Japan that starts
Yeah.
spreading. So I think that's a fair point. Kind of made sense to me then, like why gold, just grazed the 50-day on that dip and didn't really dip any further. So it feels like nobody can be short. It's kind of long or nothing in the gold market here.
Dude,
What's your
I get to, I just in general, but with gold also, I'm scared to trade. I'm scared to trade gold. I'm
yeah?
scared to trade bonds. I'm just scared to trade. Like I'm kind of paralyzed where I really don't know what to do, you know.
Well, I'm expressing my view. I sold a portion of some of my longer term gold holdings, and I'm not really comfortable anymore. I had been comfortable for a while, and I'm not really comfortable anymore. So now I'm in the position of deciding: do I want to buy that back, or do I want to wait and see if I'm right that I can buy that back a lot cheaper? Right
By,
now, it's a bitch to decide.
by the way, David Einhorn had some comments on gold recently,
What do you say?
and he says, look, if gold goes to 3,800, we're happy. He's like, if gold goes to 30,000, we're not happy because there's a problem,
Yeah.
right? Like there's a problem.
Yeah.
So
Yeah, I mean that's where we're going to see central banks intervene way before that happens, right? Because that's going
yeah.
to be their alarm now. As gold is going to be bid the highs, no offer, and they're going to be looking at each other and calling each other on the phone, saying, "What's our next move?" While all this is going on, I'm kind of extremely surprised that the stock market is in a state of suspended animation between 5,900 and 6K. I think it's kind of a sign of relative strength that the VIX is 16 bid at 20, and Israel is talking about bombing the daylights out of Iran's nuclear facility. So there's a kind of a give and take there. I think it's kind of manifesting a little in the oil market. Oil, won't break down despite the fact that there's tremendous amount of storage and building up now, and it won't certainly break down because Israel is about to bomb the daylights out of Iran, or so that's the headline telling us. So I don't know what to do with the oil trade either, and there's a lot of conflicting signals in the macro markets right now.
I read something recently. So Monday, the futures were down about 1% in the S&P,
Mm.
and they went back to unch by noon. So apparently 4.5 billion went into the market from the open to noon. It was all retail buying the dip. And this is where we are right now. We're back in the buy the dip phase. You know what I mean? So you can't, like, even if you want to be short, you can't be short because all these idiots are going to buy the dip.
That's
So
right. And all those idiots just bought the dip from all the European hedge funds and won that battle. You can't ignore that. You know what I mean? Because that was crystal clear. There were European hedge funds and mutual funds blowing their brains out, and retail was the buyer. So, I just like to point that out because everybody likes to say, oh, let's fade retail here, fade retail here. If you faded retail a month ago, you're short the S&P at 5,000 without a plan. So that is a force that is to be respected in the markets, in my opinion. So we'll see what happens. But the one thing that I do feel, JD, is that if I have a general vibe, it's that the stores of value are performing while there's this adjacent risk in Japan. You know what I mean? Bitcoin right to the highs, gold right off the moving averages, gold miners, which are the best performing sector in the market, gave up the 50-day and sprung back above it, and we were able to get into the gold miners on the view matrix, and we're managing the risk from here. So I'm trying to trade what I see and just manage the risk and not kind of shrink back and not take risk, because I think that there's opportunity developing and I want to have some stuff on the pad so I know how to react to it. What else? Are we leaving anything relevant out in the markets, JD?
I mean, there's some idiosyncratic stuff. I do want to talk about one of my stock picks in the newsletter.
Do it.
Mosaic, the fertilizer company.
Wow. Okay. Why?
Yeah. So I had a thesis, but basically I was screening through charts and I was like, so the chart's been shitting the bed for like the last 2 years. and it looked like it was basing and bottoming. And I'm like, this is an interesting chart. And I said, I'm like, agriculture has been in a bear market for a couple of years now. Like, we get some bad weather, things change, prices go up. I mean, this could be real. This could have some gearing to the fertilizer stocks, and it's up about 30% in the last month or so. So, you know,
I mean, that's a great looking chart. It's we're going to put that one up for sure. I'm going to have Braden put that chart up because, that chart rallied all the way up to a high of 80 and then backed off to $20 with this sell off in grains. Then it broke up above the moving averages and went to $35. So, yeah, this is a crystal clear breakout. And you'll notice immediately when you look at the Mosaic chart, she trends like a son of a bitch. Right? Like, don't fade the thing. Like, this is early enough where I'm not going to say to buy it at last sale, but you will see me prowling around on any dip toward the moving averages, man. That is low hanging fruit and a great observation. I like to stay away from individual stock picks because I just get myself in trouble most of the time. All right, JD, you want to go off markets?
Yeah.
I'm going to read you 3 quotes from one of the birthday boys today. He's one of my favorite sort of historians, philosophers, public servants to study, Niccolo Machiavelli. You ready? The ends justify the means, quote 1. Quote 2, I love this one. The wise does at once what the fool does last. And the last quote, they made a movie about this one, I think. It is better to be feared than loved if you cannot be both. What do you think, JD? What strikes you today?
I like the second and third quote for sure.
Why?
What? Say the second one again.
The wise does at once what the fool does last.
I mean, dude, that's a perfect market quote, right?
Right?
Like that's like a trader's quote right
It is.
there. Yeah,
It
yeah.
is. It also.
You ever meet somebody who is the fucking caboose? They're like the last to know about everything. Like, Nvidia on the high is like, hey, I heard about like these AI chips, like what's going
Yeah. And if I did a quick AI study on Machiavelli because I wrote about him in my note today, and I'm kind of obsessed with the guy. But that to me, that's like, he believed in action over inaction. He was like, of all things, act first, and so like the wise does it once, what the fool does last. That shakes me out of procrastinating. That shakes me out of like analysis paralysis, and it gets you to go with your gut. And like you said, it reminds you that you want to be doing now what the latecomers are going to be doing next week. So there's a lot of great strategizing to do when you're reading Machiavelli quotes. That's for sure. I watched a great podcast that I shared with you, and I'm going to be sharing around, and I'm actually going to write an essay about it because it struck me so much. Jawad Mian interviewed Steve Cohen at the Sohn conference. Did you catch a little bit of that, JD?
So, first of all, for background, like I want to say like 3 or 4 years ago, Jawad like honey badgered an interview with Steve Cohen.
Yep.
And everybody like it wasn't a live interview. It was like I think it was in print.
Well,
And
he interviewed him on the computer. It was screen. Yeah.
Yeah. And everyone's like, who is this Jawad guy? And how is he interviewing Steve Cohen? Well, he's the honey badger. Like he just like made a nuisance out of himself until Steve Cohen said, sure, I'll do an interview.
Yeah.
And I guess now they have a relationship. So they did this interview at the Sohn conference. I mean, Jawad's a smart guy. I've known him since 2014. Yeah, it was a good interview.
It was really good, and they have clearly developed a relationship of mutual respect, and maybe it's been out of Jawad's tenacity, and maybe it's just because Steve likes Jawad a lot. Jawad's a really likable guy. He's an extremely sort of peaceful and spiritual gentleman, and he's a close friend of mine. But what I loved about it is that Steve was not willing to go into the recession route right away. He's like, what's the story? Jawad asked him directly, are we going into a recession? Are we not? And Steve was like, the tariffs, this and that. I'm going to expect that growth is going to slow, right? He was not going into recession. I think that he believes that things are going to work at some level that Trump is doing. And he thinks stocks can range trade. He's like, stocks don't have to go up every year. And that's good advice. We could be in one of those situations where it's just going to be the battle between, the Trump bull market versus what he's doing is damaging, and it could be a long year. So, but one thing that he noticed that I've been preaching regime change, man. Things that worked last year are not going to work this year, and it's probably going to be that way going forward. So I appreciated that sort of forward look that he gave us. And it's a great interview. If you haven't seen it yet, definitely give it some time. Like I said, I'm going to write a whole entire essay on it because most things with Steve Cohen kind of move me. Has to do with the fact I think that I covered him for years as an equity salesman and had made several trips to their shop at Point 72 and got to actually stand 10 feet behind Steve for like better part of a morning and kind of watched him just sitting there with his arms folded, like staring at the screens, not moving and not talking to anybody. And I thought that was pretty cool, kind of sitting at the center of his universe. So that's it, JD. I think we covered everything. We got, most importantly, thanking our subscribers and new subscribers. That's really, really important to me. The growth of this podcast is something that JD and I talk about offline and try to promote all the time. Is there any closing remarks that you got, JD, for podcast number 47?
Man, I just got to say, my trip to Mississippi was unbelievable. And, Mississippi kind of has a reputation for being like 50th out of all the states in everything, like, infant mortality and education and stuff like that.
Yeah.
I was in Oxford's a legitimately nice town. But it was an incredible experience. I met a lot of people. They were very welcoming. Like it was terrific,
I
So,
felt the same way when I walked away from the place. We went and visited Ole Miss as a potential place that my son was going to go to college, and he wound up at South Carolina with my daughter, which I'm thrilled about. But man, I would have been thrilled if he went to Oxford. What a beautiful place and a beautiful college.
yeah.
Glad you got that trip under your belt, and I'm excited to read what you wrote there. So to close off podcast number 47, hasta la vagina, good people.
Hasta la vagina.